Okay, everybody, we're going to go over our Forex trades for today, Thursday, October 22nd. First, we have to discuss the economic news here in the States and abroad. ECB kept interest rates unchanged, which everyone knew that Mario Draghi and his cronies were going to do. But just wanted to touch base of some of the policy statements that he had this morning. That was what everyone was waiting for. He said assets purchases are proceeding smoothly. They have a favorable impact on credit, he claims. Domestic demand remains resilient. He sees downside risk to growth and inflation outlook. So here they are with zero bound rates, some pieces of paper negative, and he's saying there's risk. Downside risk is to growth and inflation. If you can't have growth, I got news for you people. You can't have growth and you can't have inflation with zero bound interest rates and even negative interest rates on certain pieces of paper out there. There's something very, very wrong with the mechanisms of your economy. If you cannot have growth and inflation, we're having it here in the States, not as bad as over there in Europe. But we're certainly having it. Japan is having it just as bad as Europe's been having it. It's a complete joke. And I don't know, these policymakers, they came up with this theory of quantitative easing because that's all it was a theory. It's never been done before in human history. And, you know, sometimes theories don't always pan out to what reality gives you. And they obviously don't want to throw in a towel. They obviously won't just come out and admit that it's not doing what the theory says it should be doing. And then they don't even try to think outside the box. It's like they're just throwing their hands up and let's just keep doing the same thing. Who was it? Einstein says the definition of insanity is doing the same thing over and over and over and expecting a different outcome. Well, that's what our central bankers are doing. It's complete insanity. Let's see, what else did he say? Degree of policy accommodations must be re-examined. ECB ready to use all instruments in line with mandate. Okay. QE to continue until September of 2016 or beyond if needed. Well, we all know that. He says low oil prices to support consumption, investment recovery hampered by sluggish structural reforms. So he says, look, so imagine what happens if oil prices were to spike back up again. He's saying low oil prices is helping support consumption in the Eurozone. Holy moly. And they can't even have inflation and growth. If oil prices spike, it's going to be a full-blown depression over there. Absolutely incredible. He admitted here in his next statement, he admitted that inflation recovery could be slower than expected. You know, again, but he just said nothing about maybe changing course. Just kept going right down the same old road. Again, he touched on oil. Driver of domestic recovery is lower oil prices. That's an unbelievable statement. Driver of domestic recovery is lower oil prices. What? How about the QE that you've been doing for all these months or whatever it's been, 6-8 months? That should be the driver of your domestic recovery, not lower oil prices. Again, if oil spikes up, man, I don't know. This is what touched things off around the world. This statement here, deposit rate cut was discussed. So they already have a negative 0.1% deposit rate. Now that's not deposit rates from people putting money in their bank. It's deposit rates from the banks depositing at the ECB and their mechanism, just like we have here in the States, right? They are, and we've been calling for, if they want to continue to go down this QE road with zero bound interest rates, they got to go all the way and they got to make the deposit rate negative. And we've been calling for that for about 2 years. One of the problems, they've done it, okay, but they've done it such a small amount. It's 0.01%. It's such a minuscule amount that the banks don't care. And they're like, yeah, sure, we'll put it in because, all right, so if we make 3% on our money, so we end up making 2.99%, you know, it's too small of a number. If they're going to do that, They got to do it in a big way. They got to go 1, 1.5%, 2%. You have to force the banks to lend the money somehow. Okay, there are rules and regulations, as they've done here in the States and they've done in Europe. The rules after the financial crisis, they've created all these new rules and regulations that made things so hard on the banks that the banks don't want to lend. One, they have to put more money in their reserve at the ECB, at the Federal Reserve, whatever, more money than they had to before the financial crisis. So that leaves less money to lend out, and then they don't want to lend it out because there's so many rules and regulations about the lending of the capital. There's rules and regulations about them taking certain monies in from certain institutions as deposits. So what they're doing is counterproductive to the complete definition of a counterproductive, is what these central bankers are doing. Whether or not they don't know it, I can't believe that they're not that smart that they don't know it. They just either don't want to admit it, don't want to give into it, whatever their problem is, I don't know. But if you're gonna go negative rates on deposits, you got to go in. You got to go all in. You got to go, like I said, 1, 2. Figure a number out. What would hurt a bank? If a bank's going to leave money above and beyond what they required by law to leave money at the ECB and the Federal Reserve, which they're doing, and first of all, they should be lowering, the Federal Reserve, ECB should be lowering the amount that by law banks have to keep there, not raising it. Okay, they should lower it, and then any money above and beyond that, they should be, the ECB and the Federal Reserve should be charging these banks a good percentage. 2%, 3%, 5%. Figure a number out that will deter the banks from leaving it there. I'm not saying that the banks are just going to automatically start lending it out, but I think it'll tempt them to start lending it out, okay? They have to create more financial engineering if they want to be at zero-bound rates. We don't even believe they should be at zero-bound rates. We believe that they should start raising rates, let the economies take a hit, but raise rates to create real inflation. Higher, believe it or not, higher rates at this point, higher rates are actually create real inflation. Right now, there is no inflation because there's no incentive, and we've talked about that in other videos. Whoops, wrong mouse. Let's see. Okay, I think that was pretty much it for ECB. We did get Chicago. We did get Chicago Fed national activity number came out this morning. It's just stagnant at 20-month lows. Terrible, right? Terrible number for our economy here in the States. We got housing data. Oh, we got U.S. leading economic indicators tumbled the most in 30 months this past month. And certain politicians want to tell us the economy is strong. Home sales actually beat, but this is the kicker. Everyone's going to see the headline, home sales better than expected, okay? This is the kicker. September existing home sales fell 6.5% from August. But after seasonal adjustments of sales after seasonal adjustments by the government, sales actually rose by 4.7%. So the government is doing some type of seasonal adjustment, if you read the statement, that it is bringing the sales for existing homes from down 6.5, from a negative 6.5 to a growth of 4.7. It's absolutely comical, and we've been saying it along. Home sales cannot be as what the government's claiming when we know permits are extremely weak. We know all these other indicators are so weak in the economy that it's not going hand in hand, okay? Matter of fact, we were just reading a statement, a research report, that there's no single family, that there's no recovery in the single family housing market. Since the Great Crisis, it's only recovered to 1992 levels. I'm not saying the prices of the homes. I'm talking about the amount of people that actually own homes, that can get homes, that can afford homes. It's at the 1992 levels. It's an absolute joke, but the government, the press, they'll do everything in their means, everything possible to put a positive spin on it. And I understand, and I can understand that philosophy and that thinking, because you want the people to think the economy is good. But you have to also be real. You can't take numbers and skew them that widely. You have to be straight up honest. Tell the American people, this is what it is, and this is the course of action we're going to take to fix it. If, in fact, it doesn't fix it, we will adjust our course of action. But they won't even do that. They think, I guess they think that we're all just sheep walking around, the country and the world, and just have no clue to what's going on. Maybe we can't read for ourselves. Maybe, I don't know. Anyway, so let's get to. We just had 2 trades, lost 3.4 pips on a size adjusted basis. Couldn't really trade this morning. I mean, with the ECB, they came out their straight decision at 7:45 East Coast time. Then their policy statement was the big thing at 8:30, and Mario Draghi was speaking for about 45 minutes. And then we had all this other news. We had housing, we had leading indicators, we had Chicago Fed, we had Kansas Fed, we had retail sales in Canada. So we just couldn't put any trades this morning. We did have 2 trades last night. One was a full scalp that you see here in Euro Aussie. It looks like we left a bunch on the table. Maybe we did. This is a half-hour chart. Again, when you're doing scalps, you're going to be scalping on 5-minute, 10, 15-minute charts. So it looks a lot easier here. We did pick up a quick 6.1 pips. We were short from 1.57085. We weren't totally crazy about it because our feeling about the figure. Thought maybe it might try to hold like it did here. Tried to hold 1.57. Picked up. So we covered just ahead of that. Picked up 6.1 pips. It did break took about 15, maybe 20 minutes, half an hour after we covered. It did break, came all the way down to 1.56, call it 70, before bouncing up. This is all overnight action, bouncing up, and then here's the movement from with the ECB with Mario Draghi speaking. So that was it was a decent trade, right? The second trade was sort of like a scalp / swing. I mean, they're not pure scalps, but they're not swings by any means because you're not risking as much as you would a swing. You're risking not as many pips as you would on a swing, but you're risking more pips than you would on a full scalp. So we had 20% of our normal size on New Zealand dollar, Japanese yen. We were long this 80.526, and you could see it just, we were short at 80.526. It just never went in our favor, and just started to run. Thought maybe might run into some resistance here around 80, around 80 point, maybe 82, 84. It did momentarily, maybe for about 20 minutes, half an hour, and then just blasted through it. Didn't even stop at the figure of 81. And this is on no news. It was just ripping. So we were just dead wrong on it. So we lost 47.7 pips there. Size adjusted 9.5. So overall, we lost 3.4 pips on the day. Not horrible, but you hate to lose money, of course. Just unfortunately, this morning we just had no chances to try to recuperate some of that or all of it. Obviously, could have made it worse, right? But it was just not a risk we were willing to take this morning with all that news flow coming out, and not just a lot of news flow, major news flow, especially the ECB with Mario Draghi speaking. It's the equivalent of Janet Yellen speaking here in the States. So that's it. We're going to wrap it up. If you're still trading now, good luck. If any signals come out, they'll be coming your way. And we're looking forward to trading again tonight and tomorrow. Hopefully we get some action, and we'll do another video tomorrow. All right. Have a great rest of your day.